Hey, good morning, everybody. Top of the Monday to you. It's Hartaj Singh with the Biotech Capital Compass, checking in with my weekly video. This actually should go out on a Sunday. I apologize, just running a little slow. It was a very busy week last couple of weeks actually, and took it a little slow yesterday on Sunday. So welcome back. So today we're diving deep into biotech stocks, but don't worry, I promise it won't feel like a biology lecture. I'm going to really try. So what we're going to do today is really break down two major biotech indices, the NBI index and the XBI, which is an ETF that mimics an index, what they are and why they move differently. We'll also talk about the biggest biotech headlines and what investors were talking in February. This is through a screen that we run on Bloomberg. Which is mostly viewed by institutional investors, so that's why we think it's important. And then, of course, there's some stocks with strong momentum and others that you might want to avoid. Just very topically, talking about stocks to maybe look at and maybe those to avoid. So get your coffee. I've got my tea. Good morning. My chai, maybe your biotech-approved energy drink, and let's get on it. So let's talk about the NBI index and the XBI ETF first. The reason we use these two when we do comparisons is when you look at the charts, there's clearly one big difference. If the NBI index and the XBI ETF track biotech, why do they move differently? They broadly have a similar representation of biotech stocks within them, broadly speaking, but why are they different? So think of it this way. The NBI index is basically like a fancy biotech VIP club. Big companies like Amgen and Regeneron run the show, and when they make moves, the whole index shifts. The XBI ETF is, on the other hand, is really more like a biotech potluck. Big and small companies, they get an equal seat at the table. This means smaller firms have more influence, and as a result, the XBI is far more volatile. So for right now, the NBI is steadier, following the industry giants, while the XBI has been a little bit more of a roller coaster, wild swings and big surprises. And let's see really what's happening in the charts. The NBI actually has been really on a bumpy ride recently. Big swings up, big swings down, and now it's trying to stabilize. It recently bounced off lows from mid-February and now is testing a major resistance level. It's what's called in technical terms. Think of it as someone trying to push open a heavy door. If they can break through, we could see a strong rally. But if not, we might see another dip. One good sign, momentum is shifting, buyers are stepping in, so the next few days will be key in deciding whether the NBI gets a breakout or another pullback. Let's talk about the XBI, the ETF, the technical analysis there. And again, this is very simple. Now XBI, well, let's just say it's having a tough time. Picture a car stuck in reverse. Every time it tries to go forward, it hits a speed bump. That said, there is a glimmer of hope here. Momentum indicators are improving. Basically think of it as storm clouds really clearing after a downpour. Not sunny skies, but you might want to keep those sunglasses handy. I think the XBI, that metaphor works really well. Big level to watch is $91, $92 on the XBI, the price action. If the XBI breaks above that, it could signal a real shift. If not, more sideways action or even a dip lower could be in the cards. Now let's just kind of move to what have been the biggest biotech headlines and what's really moved the markets. And here what we do is we look at Bloomberg. I mean, there's a lot of news channels essentially where you could look at what people are focusing on biotech. We look at Bloomberg essentially because the Biotech Capital Compass really focus more on educating people about how institutions think about biotech investing, also to get across to people who might not have access to Bloomberg as a tool, it's pretty expensive on a monthly basis, to see what really folks with this access, institutions mostly, are looking at and what's important to them. So let's talk about February's hottest biotech stories because wow, there was some serious action. Merck KGaA is maybe in talks to buy SpringWorks, proof that big pharma still loves biotech takeovers. Eli Lilly has been on a shopping spree. They've been acquiring Organova's FXR program, sending the stock up 200%. Now that's really the kind of jump that makes biotech traders dream of. That's really When biotech gets back to a more normal state of affairs, hopefully we'll see far more of these moves and with more consistency among the smaller cap names. Gilead really shot up on breakthrough clinical results on its HIV franchise, proving once again that good data equals big money in biotech, even with the larger names. Novo Nordisk has got stuck in some controversy. They're having some back and forth with Singapore, tied to assets, millions of assets tied to the biotech tycoon. It's really not a good look, and especially if it's hitting headlines. And then, tiny biotech stocks here and there still tend to move, which kind of is a segue into China. Recently, there have been articles, I think, in the Wall Street Journal and others on the China biotech boom and what's happening there. So let's talk about China's growing biotech scene. We have pointed out Akeso, A-K-E-S-O, a really interesting biotech name based in China. They have a very valuable partnership with Summit Pharmaceuticals. We'll be writing on these more going forward. But Akeso to us is very interesting because of just great science there and approved drugs in China, a great partnership with an American company, and this is a company that keeps on moving forward. This is a write-up we did, I believe, in the October-November timeframe. It's free. This was during the time the Biotech Capital Compass was free, so you can go and access that. We'll be writing about that more. Now, China has been aggressively expanding its biotech sector, and Big Pharma is taking notice. It's been taking notice for a while, but it's really starting to pick up. Merck licensed to China a Chinese cancer drug for a deal up to $3.3 billion. This is really not pocket change. Merck is probably a premier pharma, oncology company especially. Novo Nordisk is expanding its obesity drug pipeline in China because demand there is skyrocketing. Sanofi just inked a deal for a Chinese-focused heart drug, showing cardiovascular treatments are also on the radar. And China is not just sort of what you'd call like a one-trick pony, focused on oncology with companies like BeiGene or Akeso, et cetera. So why is there all this interest? China's biotech industry is really evolving fast. Think of it almost like it's electric vehicle boom, but for pharma. They're putting a lot of money into it and it's evolving very quickly. Regulations are getting easier, making China more attractive for drug makers. And China is a massive market, especially for obesity and diabetes treatments. So again, not all is smooth sailing here. It is a really good looking market right now, but it's not all smooth sailing. There is geopolitical risk, remember that. Some investors still worry about transparency issues over there. One thing's for sure, China is becoming a major biotech player and the story is getting started, which is why we just wrote up Roche recently for you all a few days ago, and we'll be writing more on Akeso and its partnership with Summit, because we think if you're a biotech investor for the mid to long term, define that as 2-3 years or longer, then really you want to diversify outside the United States, which is a great biotech arena. It's a great place for biotech innovation and biotech stocks. But you might also innovate, invest outside of that to risk mitigate, your biotech portfolio. So just talk about stock picks. This is just more topical, just from the headlines, kind of what's been crossing our radar, what to look at. Again, really, it's mostly large cap focus. I think smaller caps, you really have to look at readouts or LNA, license acquisition that could happen. But I think what's looking strong right now is really momentum plays. And those are Eli Lilly, after major acquisition and dominating weight loss drugs. It's got strong momentum recently. Gilead Sciences, breakthrough clinical results that have given the stock a boost. And Biogen, M&A rumors and clinical advancements keep it in play. Stocks to avoid, for us right now, again, Novo Nordisk, it's a leader in obesity drugs, a great company. But again, hitting some speed bumps. This back and forth with the state of Singapore is not really a good look. But again, I think this is a stock that could be more sort of sideways oriented, maybe something to avoid for the moment. Springworks could be acquired. That would be great. The stock's already popped, but deal uncertainty makes it really, really risky. And small Chinese biotechs. We like the China's biotech scene, but smaller ones, in the few tens of millions or hundreds of millions of dollars in market cap, there's geopolitical risks and transparency issues there, and that could make it a tough bet. So if you're long biotech, we would say keep an eye on the strong names, but stay cautious on the red flags because we do think biotech is really not as a sector, still not in a strong place. So again, the final takeaways here. What's the big picture? The NBI is stabilizing. If it breaks resistance, we could see upside. The XBI is struggling. If it breaks 91 to 92, it might turn around. M&A is hot, and Chinese biotech scene is booming, but not without risk. And some biotech stocks are crushing it. They're doing really well. Others, well, let's just say caution is the key. All right, that's it for today. If you found this helpful, hit the like button, subscribe, please. Drop us a comment. We'd love to have more paid subscribers, but got to really earn that dollar of yours. If you're bullish on the biotech sector or do you see risks ahead, we'll put a little poll also with this video. Let's discuss, and we will see you again soon next time. Take care. Have a good Monday and a good start to your week.